Good evening, this is Brian Shannon from Alpha Trends Blogspot. It's Tuesday, June 19th, 2007, and we're going to go ahead and take a look at some stocks for trading on Wednesday. I've got shares of Enerplus, I don't know what the RES stands for, but this is a unit growth trust that trades on the New York Stock Exchange. It pays a big fat dividend, and it's been in a great uptrend here. We've just seen a pretty good pullback here recently. If you look at the weekly time frame, it looks like it's entered a nice uptrend where we've got this prior level of resistance at about the 47 level, acting as support now. And it looks like the stock's ready to start moving higher again. You can see this recent correction has been contained by that declining 5-day moving average. Now it's back above it. Here's what I think we ought to do is buy this stock above $47.60 with a stop down at about $47.18 near that 5-day moving average. You might want to adjust that if you don't want to take as much risk, but that's 42 cents of risk. However, I think the upside is up to about $49.50 a share. So for your 42 cents of risk, you're looking at the opportunity, hopefully, to make about $1.90 in profit. A recent IPO is LLNW is the symbol. This is LIMELIGHT Networks. And you can see it came public, opened up high, and then pulled back. It's been trading in a tight range here in the daily time frame. So when we look at the short-term time frame, you can see there's a little bit of resistance here recently at about $20.50. Here's what I'd like to do is to buy the stock above $20.20 a share tomorrow. Once in the stock, I'm going to suggest a stop down near about $19.73. That will give us 47 cents of risk. So pretty good amount of risk there, but I do think that this stock has the potential to get going pretty good as well. I think it's got the ability to make it up to at least 22 bucks a share, and sometimes these recent IPOs really get going higher after that initial shakeout. So $1.80 is my upside target, but I think that's going to be conservative. I hope it's going to be conservative. But I'd say once the stock gets above that $20.50 level, and you're in at $20.20, raise your stop to break even at that point. So don't allow that 47 cents of risk to stick around for too long. Another stock with a very similar amount of risk and reward, hopefully, is this Gymboree, symbol GYMB. You can see it broke past this resistance in here. Now, this stock's been pretty gappy lately. That kind of concerns me a little bit, but I think it looks set up for a good trade, particularly when you look at this nice weekly time frame as well. And on the daily time frame, you can see it pull back right where we're at the 10 and 20-day moving average now. So on this one, I think you can buy it above $42.60. A stop initially goes down here below the afternoon low. That's at about $42.18. So there's another stock with 42 cents of risk. I think it's got the ability to make it up to about $44.50. That gives us a risk reward of 42 cents for the opportunity to make $1.90. The exact same risk reward as ERF, which is quite a strange coincidence. A short sale stock to look at potentially is Archer Daniels, ADM. We are in a bull market. Shorts tend to get stopped out earlier, so if you're going to trade it aggressively. But you can see how the stock was weak all day. I'd wait for a rally at least at 34.45 or so, and then to sell short weakness. I'm not going to suggest stops. I'm not going to make this an official trade recommendation. I'm going to follow up, but it does look vulnerable, something you want to keep an eye on if you need something to go to for a short sale tomorrow.